Today, CFTC Chair Rostin Behnam pushes back on election betting platforms that use crypto. Caroline Ellison faces a 2-year prison sentence for her role in FTX's collapse. And PayPal's Jose Fernandez da Ponte breaks down the company's new initiative to let merchants buy and sell crypto. Crypto markets mixed this morning, with Bitcoin and Ether holding pretty much flat. By noon Eastern, Bitcoin inched half a percentage point higher, trading at $63,500, while Ether slipped by 0.5% to $2,600. Polygon's POL token popped 2.5% to 41 cents. Also, take a quick look at Cipher Mining. That stock is up more than 15% by around midday and up 33% in the past 2 days after Macquarie initiated coverage of the stock with an outperform rating. Okay, let's talk about the top stories for today, and let's stick with the markets. Professional Capital Management founder and CEO Anthony Pompliano joined Squawk Box this morning to discuss his optimistic outlook for Bitcoin as Fed policy shifts.
If we look at that Fed interest rate cut, Bitcoin is the best performing asset so far. Gold and oil futures are kind of second. There's a new study that just came out from Lynn Alden and Sam Galligan that said Bitcoin is the most sensitive asset when it comes to global liquidity. And so 83% of the time, Bitcoin moves with global liquidity. It's more than S&P or any other asset. And so if you look at not just the interest rate cuts, now M2 money supply is expanding, and also we have cuts going on in China and elsewhere. And so I think that Bitcoin ends up being a big winner whenever we get kind of cheap money flooding into the system. And it feels like we just went through this big regime change, right? We were tightening, everyone was trying to kind of drain liquidity from the system. Now we're gonna go the other way. And so Bitcoin should be a big winner here for the next couple of months.
He also discussed Bitcoin trading activity and how he sees it as an indicator of whether the currency is having a bull run.
In bull markets, if you look on chain, basically, you go through a bear market, everyone buys up Bitcoin, they hold on real tight, they don't move it for a year or two, and then as you get into a bull market, price goes up, and there's kind of a clearing, people start to sell their Bitcoin into that bull market. We have started to see a little bit of selling of Bitcoin as we kind of broke over $60,000 earlier this year, but still more than 50% of all Bitcoin is being held, for over a year and not moving on chain, which I think is probably the best signal.
Next, CFTC Chair Russ Behnam also joined Squawk Box this morning to discuss U.S. election betting and the agency's position on sites that allow them.
I don't think there's necessarily a question that there is merit to the price discovery function of these markets, but really what the Commission has been saying for over a decade now is that these markets are illegal under current law. And we have essentially pushed that towards what we're dealing with right now with these two markets. But I would say what I've said multiple times is this pulls the CFTC into the role of being an election cop. Because if there is manipulation of these markets, if someone does take a position, long or short, which would essentially be on a candidate, and then potentially puts out news that's not necessarily true, this could spiral into a situation where you have manipulation of elections.
Earlier this month, the agency lost a legal battle against prediction market Kalshi over election betting markets, which the CFTC appealed and warned that an explosion in election gambling will harm the public interest. When asked about how the CFTC might handle offshore betting sites available to Americans before the U.S. election, Behnam did not rule out taking enforcement action.
This is the enforcement mechanism of our agency. We have to build a case, we have to get the facts, we have to allege the facts, we have to go to a court. So we do things in order, we do things with a very sort of particular process, and we don't hesitate. So if there are U.S. investors, U.S. customers being offered derivatives, without the entity being registered with us or letting us know, then we're going to bring an enforcement case.
These platforms, which sometimes use crypto tokens for placing bets, have gained popularity over the months as we head toward the election. As of this morning, this year's presidential election has $1 billion on the line on Polymarket, a prediction betting site that the agency has fined before. We reached out to Polymarket for comment, but did not hear back right away. And last, Caroline Ellison, the ex-girlfriend of Sam Bankman-Fried and former CEO of Alameda Research, faced sentencing in federal court yesterday. Crypto World's Mackenzie Sagalos was at the courthouse and has more.
Caroline Ellison, the ex-girlfriend of Sam Bankman-Fried, former CEO of Alameda Research, has been sentenced to 24 months in prison and then 3 years of probation after that, also ordered to pay $11 billion in forfeiture. This is the culmination of almost 2 years worth of cooperating with the government, federal regulators, and the FTX bankruptcy estate to help them piece together lost assets. Carolyn signed a plea agreement in December of 2022 and since then has been helping prosecutors build their case against Sam Bankman-Fried, the founder of FTX. She was a big part of his sentencing. Both Sam Bankman-Fried and Caroline Ellison found guilty of 7 different charges. Carolyn pled out to those charges. Sam was found guilty by a jury in November. He faces 25 years behind bars, also $11 billion in forfeiture. Carolyn getting 2 years because of her cooperation. Judge Kaplan and AUSA Danielle Sassoon both citing just how instrumental her testimony was to putting Sam behind bars and helping to explain the scope of the FTX fraud. Still, this is a lot more than the 3 years that the probation department had recommended ahead of sentencing. Judge Kaplan making it clear that just because Caroline was a big cooperator in Sam Bankman-Fried's conviction, it wasn't a get-out-of-jail-free card.
All right, for our main story, PayPal is launching a new service to let merchants buy, hold, and sell cryptocurrency. This comes as the company already lets personal accounts get into the asset class. Earlier this week, Mackenzie Sigalo spoke to Jose Fernandez de Ponte, who leads the company's blockchain, crypto, and digital cryptocurrency unit, to learn more.
So PayPal, for the first time ever, is enabling business accounts to buy, hold, and sell cryptocurrency. Walk me through the launch and what it means for merchants using your platform.
Well, Mackenzie, as you know, we have been involved in digital currencies now for the best part of the last 4 years. We have been active on stable coins for about a year or so. But until now, only our consumer accounts were able to hold and interact with our stablecoin on our platform. What we are enabling now for the first time is for merchants to be able to interact with it as well. It's been one of the features that has been the most demanded by our merchants over the last year. And we take it to be a very good sign that the appetite of businesses to interact with these new payment instruments.
So have you heard a desire from businesses to utilize crypto? And do you see real demand from customers who want to pay merchants with cryptocurrencies?
So those are two different questions. And definitely we do hear demand on the merchant side for cheaper and faster and instant settlement of payments. And they do see the value of stable coins and other digital currencies as a way to get in there. I don't think, and we have said this for quite a while, that consumers in most of the Western markets and the US and Europe will be doing mainstream e-commerce funded by stable coins right away. If you look at the use of stablecoins these days, it's mostly for crypto trading and mostly for cross-border payments. I do think that we will continue to see stablecoins for payments cross-border, and especially on B2B payment use cases. So a lot of the demand that we see from merchants are companies who want to pay their suppliers in something that settles instantly and is low cost, and chief financial officers that have complex treasury operations, and they want to make sure that they can move money around the world quickly and cheaply.
Now, is this just for U.S. merchants for now?
It is just for U.S. merchants, yes.
I mean, do you see an opportunity abroad? I mean, lots of countries and regions around the world are more crypto literate than the U.S. You were just chatting about that a minute ago, this desire for international settlement, stablecoins being a big part of that narrative. Do you see a path to capturing business from merchants who are looking to integrate crypto payment options at checkout?
We do see that, as I said, we see that mostly on the B2B use case right away. There is value in being able to aggregate demand from consumers who are overseas, but they lack international credit card instrument. And we see people in Asian markets and Latin American markets who want to buy from U.S. merchants, but they lack the traditional payment methods to do that. If you see most of the retail payment activity that you see these days is that aggregation from consumers offshore who want to buy from U.S. merchants. On the merchant side, however, that has a number of different ways. We will see appetite from merchants outside of the U.S. who want to pay suppliers in the U.S. but they lack access to hard currency, to dollars in their home markets. And that does not require that they have a PayPal account out there. Remember that the way we think about our stablecoin is like a tokenized version of the PayPal balance that people have used for 20 years. But now you can interact with it without having a PayPal account, and you can send it outside the PayPal ecosystem. So even if only merchants in the US right now will be able to hold the stablecoin and send it out, merchants outside the US will be able to interact with the stablecoin because it's already available in more than 20 exchanges and wallets all over the world.
Okay, so you and I spoke in August of last year, right after your team had launched PayPal's US dollar peg stablecoin, PYUSD. Certainly not the easiest thing to get off the ground. It's my understanding that it took you guys multiple years to get regulators on board, even though you were working with Paxos, a company that had already done this before. So now you're more than a year in. Who's using your stablecoin and how has it been going so far?
It has been going really well. As you remember when we spoke last year, the whole idea behind our stablecoin is that we wanted to see a stablecoin that is designed for commerce and payments. As I said earlier, the vast majority of the market cap that you see out there now is for crypto trading. We are less interested in that side of the house. And we look at the market cap of stablecoins, but especially we look at the on-chain transfer volume, because we want our stablecoin to be used for what we call value in motion more than value in rest. We do care that the stablecoin is moving and changing hands. In that sense, we are very, very satisfied with the progress. If you look at inside the PayPal ecosystem, we continue to deploy that on some of our franchise. We know that the uniqueness of our stablecoin is the ability to connect with the more than 400 million consumers, more than 35 million merchants in our ecosystem. It's the only stablecoin that is supported inside PayPal and Venmo. Holders of that stablecoin inside PayPal can already buy at checkout at millions of merchants. We deploy that on Zoom, our remittance business. And it's a very clear value for folks who are sending money back home to support their loved ones. So if they fund the remittance in a stablecoin, they don't pay any fees. We are now enabling it for business accounts. We enable that. We establish support for ENS. We think that it's important to remove friction so that people can send to human readable addresses. And we have seen a really, really nice adoption in the market outside of PayPal. Most of the more relevant wallets out there support the coin. Deploying on Solana was a big plus for us. It's a really good protocol for payments. And as we said, it's available in many of the exchanges worldwide. So very, very satisfied with the progress. Obviously, we're still getting started.
Purely looking at market cap, PYUSD hit $1 billion at the end of August. It's down to around $724 million, nearly 30% plunge here. Now, we haven't seen Tether or USDC have a drop that steep, not even when Tether depegged. Do you see that as any cause for concern? And do you have any insight into the dynamics there?
Not at all. I don't think it's a cause for concern. If you look at the evolution, has been a little bit of seesaw with an upward trend. And I think that we will see volume coming up and coming down, but consistently in the long term going up. It is a little bit of law of small numbers. When you have a smaller base, it's obviously smaller market shifts can drive the volume up and down. When we look at the on-chain transfer volume, though, the amount of the stablecoin that has been changing hands every month, we see that going steadily up, which is the metric that we are most focused on.
Okay, that's all we have for Crypto World today. We'll be back again tomorrow, and we'll see you then.
Changing hands every month, we see that going steadily up, which is the metric that we are most focused on.
Okay, that's all we have for Crypto World today. We'll be back again tomorrow, and we'll see you then.